Morgan Stanley report, which came in on the real estate space, where they have indicated that the July launches were weak. In fact, they've showed a first dip in the past 4 years in terms of last 12 months. Q on Q is down around 2%. But they are saying that it could possibly catch up in the month of August or September. To talk about this, we do have Ghulam Zia, who is joining in. He's the Senior Executive Director, Knight Frank India. Ghulam, hi, welcome to the show. Well, we're not discussing your report today, but there is a report on real estate which has come out, which is indicative of the fact that the July launches have been a bit sluggish and have shown a dip for the first time in 4 years. Is that the case? What's the on-ground situation currently?
I think the launch number that you're talking about, I would not contest it because even our findings are more or less in sync with what you're talking about. But I would not be unduly worried about it because, another few days and we will be entering the Shraddh Paksh. This is that period where, in any case, transactions actually take a backseat because most of the customers don't want to sign the dotted line during that phase. So this is definitely in preparation of that phase where you don't need to have a huge inventory hanging around in the market with not much of an interest from buyer community. So what you're talking about is right. We are also expecting when post Shraddh Paksh, when the festive season launches it, and that's the time Diwali, Dasra Diwali and all of that will begin. And that's when we will see huge amount of interest coming back. And I'm sure the launches also catch up. After all, developers have been in the market for long enough and they know the seasonalities. So I would say this is a temporary blip, nothing more to that than that.
Okay. So just to sort of, get more clarity, you're saying that these launches have slowed down only because of the Shraddh period or the, upcoming Shraddh period and not because there's a bit of a slowdown in terms of the inventory or in terms of launches in general. You're saying it's only limited to the festive period, the Shraddh period, because the reason is that this is data compared to the previous years, and the previous years also had the Shraddh period. So what has changed this time?
So 2-3 things. First of all, as we all know that every 3 years Shraddh Paksh also shifts by about a month when you have an extra month in the year. So that is also something which we have to take into account. And that said, while we spoke about average out, whatever is the situation in the country, different markets are obviously behaving differently. So while we are sitting in Mumbai, we don't see any kind of slowdown of any sort. In Mumbai, we just last data point that we have was the number of transactions in July was exactly the same as the July of last year. So we're talking about YOY data also. Different markets are showing different trends, but at least Mumbai is not showing any kind of slowdown. Of course, Delhi did see last 2-3 months in Delhi have been bad. So is the case in Bangalore. Some amount of slowdown coming in these two markets. But at the same time, Chennai is looking up. Pune is doing exceptionally well. So when we're looking at averaging it out, then the trend is almost the same as last year. And that's what I was referring to more. If I then drill down to each of these markets separately and talk about launches by these developers in each of these markets, then the picture would be slightly different in different markets. But that said, the events that we're talking about today are not too much to worry about because the 2% could be just a temporary blip, as I was saying. We need to wait and watch because with the festive season coming up, we shall see huge amount of interest getting back in action.
Okay, that'll be interesting to watch out for in the festive season where we see that action coming in. Ghulam, good afternoon. What about unsold inventory? Ekta did touch upon that, but is there any rise or decline and any specific area which is seeing a major impact because of this unsold inventory?
Okay, let's get into statistics. Let's talk about numbers specific. What we do is we watch the time required to sell the inventory in the market, and that's the unit we use that. Whatever is the inventory in the market, how many quarters will it take to sell this entire inventory, assuming no more new supplies coming in? So when we look at that number and look at different markets and segments, something which is very, very clear is that overall, about 2.5 to 3 years of inventory period to take complete absorption. Now, if you then drill it down, there is one segment, and since we're talking about too much of luxury all around, segment of luxury real estate where there is clearly some amount of slowdown setting in, which is 20 crore to 50 crore ticket size market. That is where the amount of time would be taken about 4.5 to 5 odd years to absorb the inventory. Rest of it is all hovering around 2 years for the whole inventory to be wiped out. So these numbers are very healthy, except for one segment which I was talking about, which is 20 crore to 50 crore segment. That is where we do see some sweats. But otherwise, especially the lower end of the market, if I talk about below 50 lakh, there is a huge amount of lack of supply there, because as we all know, developers haven't been focusing on the lower end of the market, and that's where the velocity of sales, less than 2 years, you will sell everything that is in the market. So when we are talking inventory, we need to drill down into what is the speeds. And mind you, the speed I'm talking about is based on the last 10 quarters of rolling averages. So as the rolling averages are also moving, we do realize that as the slowdown sets in, we do see a different trend. But right now, biggest slowdown is not yet in the picture. So we do see huge amount of comfort here from the developer side, because they will not take more than 2 years to absorb the inventory that they have at hand.
Right, we take that point, Ghulam. At the upper end, there is no dearth of supply, definitely no tapering off in demand either. But it's the lower end where people really want homes for consumption, but developers obviously not looking at that space, because, why sell a house for 50 lakh rupees when you can sell it easily for 20 crore rupees plus as well? I get both those things, but, moving off the residential space, given the sort of economic uncertainty that we have, not only because of tariffs, but just general urban consumption slowdown, and, the worry that IT companies aren't hiring, etc., the GCC is getting impacted. What is your thoughts on, commercial office rentals and real estate supply out there, warehouses and malls, because we still have a large amount of mall vacancy?
Okay, let's start with offices first. Last year we had taken about 70 odd million square feet of office space absorbed in the whole year. And this year we are on Q3, and we are expecting this quarter we shall either equal the last whole year's number or surpass that. So we are talking about this year, we are targeting at least about 85 odd million space absorption in office sector. So that means office sector, at least so far, is not affected by whatever tariff wars we are referring to. Not much of a difference yet. You're right. There are talks of slowdowns here as well, and some job losses and GCC slowing down, etc. However, the existing commitments have brought current year to a level where we do see a breach of the last year in 3 quarters itself. So in that way, at least office sector is doing fairly well. In fact, I would say fabulously well, but we would wait for one more quarter, because as you said, even we are worried about the impact of tariff wars on Indian office space absorption. But right now, nothing to worry about. Now, in terms of rent, again, this is once again supporting or strengthening the argument I'm putting up. Weighted average 5 to 7% of increase everywhere. In a few places, we have actually walked into double digits. 9 to 10% of rent increase in a year is the kind of number we are looking at in Bengaluru. Even in Mumbai, we are reaching that same number. So we are talking about both these giving a clear signal that office market has nothing yet in terms of impact coming from the global uncertainties. Nothing to worry about as far as office market. Now, last quarter, it will be interesting to see how the last quarter pans out. But as I said, even where we are today, we have already equaled or surpassed last year's numbers as we are standing. Now, coming to retail. Retail has always been a very curious kind of a situation. First of all, not many developers are doing retail malls for last 7-8 years. And the amount of new supply that comes in is also very, very restricted. And with one or two of these guys consolidating, like the retail REIT that has come about. So we do see professionalism coming in a big way. So two things. First of all, when every developer was looking at doing retail is out. This is a phase where experts and professionals are doing retail spaces. So you're right, there is some amount of concern, but those are restricted to a few of the disadvantaged kind of malls or locations. Tier 2, Tier 3 cities, we generally say that besides the top 8 cities, every city can't take more than 1 or 2 malls at max. So if you have a third or fourth mall, you know that city is up for some serious trouble as far as retail is concerned. In Mumbai, Delhi, Bangalore, these are the markets where we do see about 7, 8 or even 10 odd malls doing fairly well. Amongst them, at least 2, 3 malls doing exceptionally well.
So net.
The consumption, and again, as I said, a lot depends on how the festive season turns around. So we are expecting retail not to do very differently. It is, I would say, a status quo. How it is behaving for last couple of years shall continue. Again, nothing strikingly different even in the retail sector.
All right. So net, Gulam, if you had to just leave us with your thoughts in terms of where you see the real estate sector this year, you see it to be equal to last year, better than last year, or worse than last year based on your assessment at this point in time?
So if I talk about real estate sector overall, well, about 80% of real estate sector is residential. Remaining is retail and offices, etc. So the performance of real estate sector hugely depends on residential market or residential sector. And there, I would still say there's nothing much to worry about because the way things are panning out, at least the first 3 quarters have been pretty much equal to what we see the last YOY kind of numbers. So nothing much to worry about. However, there are discussions that this is the 3rd or 4th year of an uprise. And typically, if we look at about 10 to 11 years of a cycle, we are reaching that place in the property clock where we would be closer to 12 o'clock. But that's a debate, whether we are at 11 o'clock position or at 12, or whether immediately after that, do we see a quick a fall or something? Lot of discussions, but I would say we need to slow down a little. We need to reflect upon how the industry is right now behaving. And maybe after a couple of quarters, we can reassemble and see how it is moving. But for the moment, at least I don't believe we have reached the 12 o'clock position, maybe 11 or somewhere thereabouts, but not 12 yet.
Okay, Mr. Zia, thank you so much for joining us on the show, and giving us insight in terms of the real estate sector. Maybe not much of a worry right now. After a couple of quarters, we'll reassess the situation as well. But on that note, let's